Because if you don't know where price is going, in my opinion, you are straight up gambling, right?
Straight up.
You have better odds, go into the casino, throw it on roulette, black or red, right? Draw on liquidity. Very important step because you can have a bullish daily bias, but your draw on liquidity can overall be bearish, right? So for example, let's just say higher time frame, we are in a downtrend, right? We have, let's just say for example, we took out London lows, but we have our Asia lows sitting right here. And then we have our previous day low all the way down here, right? Now, what people will do, and the reason why they will take a loss, for example, is they'll go for a straight reversal, right? We took out our London lows. We have a 15-minute gap sitting right here. The first thing someone will do, and this is why they'll take a loss, is they want a reversal. They'll take the first sweep, the first market structure shift, the first change in the stated delivery, and then what ends up happening right there, they end up getting stopped out, right? Now this is where us continuation traders will actually take our win right here. We'll target that low right there. Because our draw on liquidity, we know price is going right here to our Asia low and price is going to our previous day low right there because we know overall draw on liquidity our bias, right? Now I'll draw you one more example right here. We take out our London low, and the first thing that everyone wants to do is catch that reversal. That reversal is never gonna happen because on a higher time frame, obviously that's our sweep right there. If you look at the daily chart right here, what you're straight up seeing on the daily chart is a downtrend. So why would you take the first London low sweep just to target a high? That's never going to go like that, right? Yeah. Now our step number 2, simple retracement. So my personal step number 2 in the checklist is always a retracement. So step number 2, always a retracement, because if you don't have one, you are entering in a zone where you're likely to get retraced onto, get stopped out, right? We have my personal favorite, a displacement candle, which I enter on literally 90% of my entries. Displacement candle, change in the stated delivery, which you know is a CISD, and then finally an inverse fair value gap, what the industry hates, right? So I'm entering on either of those that we are getting a retracement into this to continue lower, right? Like I said, 9 times out of 10, it's always a displacement candle, because when you're getting that much volume coming out of a POI, like a 5 or 15-minute fair value gap, you're 7 times out of 10, the next candle, if you market enter, you're just going to flush lower.